For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about peak formations and the process and understanding the timing window. Overview of today's charts, Monday, beginning of a new week, and clarifying specifically so that traders understand what the peak formation is and not to counter trend the peak formation. Let's get started. Okay, so a lot of questions about peak formations, and I read comments from traders about what they're perceiving to be a peak formation. And one key thing I want you to understand is that each session, Asia, London, and New York, in that 12 candle window is where I will look for a peak formation. So we talked about 3 session setups, and I want you to understand that concept of 1, 2, 3, and that can be over 3 hours within a session, or it can be 3 sessions, Asia, London, New York. But we can also have peak formation in the US for a move down in our 12 candle window. Into the new day, we get a peak formation low in Asia for a potential trade setup in the London session. We could call that a 1, 2, and then the thesis going into the next session is that I may get a 3 for a pullback long trade in the London window. Now, this is what's important also to understand is that, for example, if you were going to trade, let's say Asia, you want to trade Asia, which pairs potentially are going to move well in Asia? Well, obviously, Japanese yen has a high probability opportunity. In that particular case, what I would look for an Asia session trade is London, New York, Asia setup. So again, a 3 session setup coinciding back with the London session the previous day. So for example, we could have a peak formation in London that locks in the high of the day. New York breaks down and gives a low-hanging fruit trade into the previous day's low, and we can get a reversal trade in Asia, just as one example, for the Japanese yen, a 1, 2, 3 session setup for that particular instrument in the session that it is most likely to have the highest volume trading. Obviously, for example, the US Canadian dollar, well, we may get some great setups in Asia on the Canadian dollar, but that will coincide with a 3 session setup. But more than likely, often there will be trade opportunities in the US session, which means that we can have a New York Asia London or an Asia London for a New York trade, a 1, 2, 3. And sometimes if the session, so for example, we could have London maybe inside of the previous peak formation of New York. We could come down and they might put a peak formation in the Asian session, and London may trade inside back up to that peak formation in the US for a vertical move down. So these are the types of scenarios that we are going to see. You can have an inside session. Each session is where I look for a peak formation. And if we're inside of a high and a low, for example, I had a trader looking at an inside day trying to identify the peak formation. If it's an inside day, it's nothing to me. I don't care what it does inside because I know that I'm inside. Once it breaks out of that inside day, now potentially we have a scenario where they're either triggering false breaks on inside bar break traders, which can end up becoming a reversal trade in the next session, the next day. Or we may have a continuation trade in process for a market that has come up, made a peak formation high, a peak formation low, and trades back down into the low for an explosive trend trade back with the trend. And again, that can coincide with perhaps maybe again New York, Asia, London, and New York becomes our number 3 because London is an inside session. So hopefully that makes sense. But the peak formations themselves are in the session timing windows. That's how we get, we'll get a market that's creeping up and breaks structure, and then bang, it goes vertical. That's the beginning of the pump. That's the pump and dump for a potential reversal trade later on. So again, understanding that when they go vertical, that eventually on the longer time frame will end up being a peak formation if it's set up properly. Same thing applies for a market that's a creeping trend into a short squeeze. We have a peak formation that the market pulls back into. So remember what we talked about, 3 levels of rise. We get 3 levels. We'll just change that. 3 levels of rise. We get the escalator. And they go vertical. Let me change this again. They go vertical. They break structure. They pull back up into that upper level, trapping volume and roll over, trapping all the volume and taking out higher level longs. Now, when we get a situation where markets are, for example, we have a peak formation low in Asia, I'm looking for that first hour to take traders back into the peak formation. That's what sets up the explosive trade, is a market that goes back up into the peak formation. It traps traders into the high or into the low, getting them chasing what they perceive to be the trend, break in structure, and that all coincides in most cases with the equity hour. The equity hour. The middle hour, New York and London. Now, the exception to that is when we have a clear defined high of day and low of day. And we're going to look at some specific examples because traders are trading Asia and London and not understanding where the peak formation of a previous session is, which can make lower peak formations or higher peak formations, which again becomes our rectangle for high and low of the session when the new session, new day begins. So we have peak formations that in a maybe in a falling market we have peak formations up. They come down, put a peak formation low in, and the new session begins, the new day begins. Traders are trading that as a breakout, but what they end up doing is trapping traders in the wrong direction, and this market ends up rolling over to continue the original trend down. We'll look at some specific examples of this. But what I want you to take away from today, from this video, is understanding that the session windows, we'll move this over, specifically talking about Asia, London, New York, are where I am looking for peak formations. Okay? And that peak formation in most cases will be the setup in that first 30 to 45 minutes or first hour that sets up our trade that defies logic and gravity and continues the original trend or expands the range from where that pump and dump or dump and bump began. Let's take a look at the charts. Now I'm going to be using the 1 minute charts today, and the reason why is I need traders to understand the time frame is irrelevant. It's irrelevant if you're trading, if you're looking for setups the time frame, the reason why I'm using the 1 minute chart is because I'm looking for a trade at the high or low of the day or session based on the template that they've created in the session that I'm trading. So I'm looking at levels, timing, high and low of the day, session, or that previous session's high and low. For example, London creates a high and low, a new high and low, a lower high and low, whatever that may be. That is the peak formations that I'm going to be identifying for my key levels heading into the next session. So for me, I'm mainly focused on the US. But for traders, for example, who are trading, maybe they were looking to trade the euro in Asia. I have no idea. But let's come back to our 3-session setup. We have our London high. There's our high of the day. That sets our peak formation in London. You've heard me say, don't counter-trend the peak formation. The reason is if you counter-trend the peak formation, okay, so traders, next session begins, they take traders up into the peak formation. Now, this is my peak formation high. What level is the peak formation above? It's above 75. So when they come up in that U.S. session, this is a high of the day, high of the session opportunity. We have lower peak formation highs that create my new high of the day for that London session. The market then falls away. We've talked about our 50 pip box. We have volume suspended up high. We have a death line where trap volume, once they break through, that is caught. But coming back to our 3-session setup for Asia, London's our first session. The US is our second session. Okay? We come into Asia and we get a peak formation high. Asia creates a peak formation high into the lower peak formation high, which is at 50, for a continuation in that existing downward move. Now I want to come back to my original thesis that I talk about all the time. Up by the escalator, step 1, step 2, step 3, for the vertical explosive move. That's the big money trades. That's the easy money trades. Okay? 1, 2, 3. Now, that can be the other way. It doesn't have to be short trades. Again, we can get 1, 2, 3 for the explosive move vertical. Now, we can get other scenarios where we get a first red day, and the market may go Asia, London, New York for the vertical move down. So remember what I said. They pull it back up into the peak formation. So when I come to the screen, what type of day is it for me? Has it been this type of setup? We get a 1, 2, 3. That's perfect. That's a great trade. We had several of those last week. Now we may get a different type of scenario where they take them. We have a high of the day. We have a low of the day. Our previous day's low may have been in the inside. And what they've done is they've come down and they've expanded the range. And now it's inside, and traders are trying to trade this inside. And all of a sudden, at some point during the session, it goes up to the high of the day, back to the low of the day. Now, we saw an example of this on oil today. This did not happen until the 3rd hour. But I want to emphasize high and low of the day. Sometimes you're going to be trying to trade this, and you might trade the swing in Asia. You might trade the swing in London. But when we come to New York, this could be a setup that you see in London based on Asia and New York the previous night. So again, I want you to understand that 3 sessions based on the session that you're trading are where you want to be looking for a 3-session setup, because that's what gives you your 3 levels of rise, 3 levels of fall, the stair-step effect. I'll bring this line back up. And again, we might have a scenario where the market creates a peak formation high in Asia, peak formation low in London, and it could be a squeeze trade in the US session for a vertical move. You're inside. They lock in the low. They've already made the high. It's inside the previous day's high. Goes vertical and continues potentially maybe a trend trade. So the more you get specific and master the understanding of the peak formations, the day count is the same. We can get a Monday. Keep changing this. We can get a Monday. They might come down on Tuesday to the low and reverse it. And Wednesday becomes a trend trade. That becomes our day one longs. Wednesday, Thursday, Friday. These are the types of scenarios that you want to be understanding are evolving. And then in the session itself, if, for example, we're rolling over, if it's already broken down, if the market's already broken down in the Europe-London window heading into the US, you're not going to get a stop hunt in some situations. This could be a capitulation move, a creeping trend that blows off in the direction of the trend. You're not always going to get a pump and dump. On a normal day, in most cases, you will get a vertical move of some sorts because that's what sets up the peak formation for that session. They might take it all the way down and then pull it back, and then New York reverses later in the session. Or again, this could even be Asia. This could be Asia. This could be London. All different scenarios, but I want you to understand that if you're trading a certain session, whether it be London, New York, or Asia, obviously if you're trading London, which 2 or 3 pairs may move quite a bit in those sessions? Well, obviously the euro and the pound, and maybe the Swiss franc. They may be 3 particular pairs that will have their volume significantly, or their high of day, low of day opportunities 2 or 3 times a week in those sessions. So coming back to what we were talking about, we have a 3 sessions set up. Asia is inside of the New York session range. Session 1 is London, session 2 is New York. That establishes our peak formation high, a peak formation low. Asia trades up into the lower peak formation high at 50 to continue the short trade. We get our peak formation at the beginning of our Europe window, okay? Which again, I repeat, this is why we don't counter trend the peak formation. They come down and put in a peak formation low at the end of the window, okay? Trade's over. Remember what I said, the equity session, the peak formation will be in place by the end of the equity hour. So in this particular case, we got it in the first hour in line with an existing 3 session short trade. But we come to the US window, it's a broken down day. What are we looking for? There's our lower peak formation highs, and you'll notice there's a peak formation high at 75. We get a lower peak formation high. There's our stop hunt area. They've got a peak formation that locks in the high, the lower high of the day. The timing of when this happens in the session is critical to understand. 30 to 45 minutes into that first hour, we have not yet broken the high. The second hour is the setup. 23 minutes in, right before the New York Open, they go up to the lower peak formation high, into the high, they bring it back up into the high for the short trade, back down through the low of the day, which becomes a range expansion potential measured move opportunity. Again, one full expansion of the range. So, again, if you're trading the euro, I come back and my process is the same. There's the high of the Asian session. They put in a peak formation low. My low's there. They make a higher low heading into the Europe window. That becomes my new peak formation low at the end of the Asian window. Why? Because from there they went up and broke structure on lower highs. So that becomes my new peak formation low of the day. The level is 25. What that means is that if I have a short trade up top, if there's a breakout inside here, for example, we had the breakout pullback, this higher low in the Europe-London window, when the session goes vertical, becomes my new area for where I could exit that trade. So they may come down and pin into that and reverse. So I would be setting my target underneath if I was looking to sell the high of the day. They take out, so this becomes a peak formation high in the Asian session. That's my new high of the day. Why? Because it's a lower peak formation high. So while you're waiting for them to go up here, they've already gone up through the peak formation high of Asia into double zeros and broken down inside. And remember what I said. There's our peak formation in the Europe-London window. Peak formation high. Peak formation high. Peak formation low. They go back up into the high, break down and pull back for a 50 pip plus short trade down into our lower peak formation high. When it breaks, low. When they break this low, when they break that low, what do we call that? We call that our break of structure. Lower low. That's weakness. Lower low. We had higher lows. We get our break of structure. What does that tell me? We have a lower peak formation high outside of the London 12 candle window. The level is 75. Remember what I talked about. The upper part of the box is a selling area. The lower part of the 100 pip box is our buying area based on the setup. They go vertical from our break of structure, which now becomes our anchor point. Because why? Because this is a pump. How do I know they're not going vertical? They might be. Except that what happens 45 minutes to an hour into the session? It breaks down, and then New York takes them back up into the high at 75 for the opportunity to sell anywhere after this as high as possible. Whether you sell it here, it breaks down again, we get a break of structure inside again, and they go back up above the previous day's low of day, anywhere in here as it's falling. This is the acceleration phase. So somebody asked me the other day, how do you tell when a trade's about to accelerate? When it starts to collapse away from the peak formation, that's the acceleration phase. So they pop back up. This pop-up candle, I talked about that. If you're not already short above the previous day's low, that now becomes a ceiling for resistance. You'll notice they're trading up into the peak formations. Once this starts to fall away, you cannot touch this because you're chasing it lower and lower and lower. Obviously, you become at greater risk, and then eventually the trade capitulates away from you. Now, this is the euro. Again, not saying this is a textbook, awesome trade setup, but I want you to understand the concept of 3-session setups. Also, peak formations in the sessions themselves. The peak formations are in the sessions themselves. Asia, London, New York. The yen is in a trending market. Now you can go and review your own charts. Go look at your charts and understand the difference between trying to sell something that's continuing to move higher and higher in a trend versus a market that goes pump and dump into a session open, which again, you'll notice the timing of all this. Traders come along at the open of Europe. They want to trade the yen because it's up high, even though it's a trending market. And they go, oh, I missed the trade. When they move it before, understand what they're doing. They're going down early because they're going to get traders trading into the low in a trending market, which we can identify as a quarter level now. Why? Because the market reversed off that level, and they're trading into that level. 3 hours. This is a reversal 3-hour box for trapping volume in the wrong direction. And what do they do when they come out of the box? Sideways on top of the quarter level, new hour to continue for a 50 pip move back in line with the existing trend. Everything in this quarter box down low, notice where they're at? They're down low. That becomes order flow for the long trades. They go down and they get traders trading short underneath of the double zeros before they resume the trend and go back in the long direction. Same thing in the New York session. Look what they do. It moves before the session. Where's the pump? There is no pump. What is this? This is a dump. First hour makes a high and a low. There's our low. P3 pushes into the low in a long trending market. The new hour starts. What does it do? Pulls right back up above the double zeros. consolidate sideways before resuming the original long trade with the New York Open. Do not counter trend the peak formation. The peak formation in the session is down. A peak formation low in a long trending market. That dump is the formation of the peak formation low. If it's a pump and it goes vertical, chances are we're going to have a peak formation high for a reversal trade back down. Again, you can scroll through your charts. If you use your 1 minute charts, you will be able to see these very clearly. So again, another example. Heading into today's Asian session, just as an example, you trade New Zealand, potentially in Asia. We have a peak formation high in our US session. Heading into the Asian session, we can only continue to trade short. We have peak formation low of the day setups, which form our low of the day, and you'll notice they're flat, and we have lower peak formation highs at 50. Okay? A low of the day that is flat heading into a session at a quarter level with our peak formations at 50 gives us an opportunity for trap volume above the quarter level and low-hanging fruit underneath. That's the easy blow-off trade. So market goes vertical just prior to the open of the session. Again, you can, look for which candle and everything else. I look at the time of day. I'm looking for something at the end of the first 15 minutes that's trading back up into that session, and then the engulfment. That happens at 13 minutes into the new hour in an existing downward move that has created a flat base. That is not a low. How often do you see lows that look like that? And what does Asia do? It puts in a peak formation. Now that potentially could be our low of the day. I don't know. I won't know until we come till later, but I do know that that's a great 30, 40, 50 pip move in New Zealand for a great continuation trade. But again, just coming back and looking at the box itself, if you ignored everything to the left even and just said, there's my low of the day, they went vertical, they held volume up top, it broke structure and then pulled back up into the high for a short trade with a 1 bar stop above the high. Once it broke down, you could lower your stop above the high of the Asian session. This market should do exactly what it did. It blows off vertically in a capitulation. You're over and done in 30 minutes, and there's your Asian session trade finished. Peak formation low. London goes back up to the high of the Asian session and puts in a peak formation high. This is the day zero setup. Peak formation low, peak formation high, pull it back inside and trend the market. Now, which way are our peak formations in the US session? Our most recent peak formation is the London high, which means if we're looking for a trade setup, we want to see them pull back up into the peak formation. Remember what I said. It pulls it back up into the peak formation, trapping traders in the wrong direction. We have a break in structure. So we have higher lows heading into the Europe-London window. They break through that, and that now becomes our anchor point for our base, for our pump and dump trade setup back through the low of the day. 3 peaks, peak formation low in Asia, peak formation high in the London session, in the equity hour. Pump up, New York opens, and they bring traders back up into the peak formation of the US session inside of the London peak formation high without taking out the lows. This is the consolidation sideways for a fast, explosive capitulation style 50 pip move. Great trade. These trade opportunities, there were multiple trades today on oil, gold, currencies. Timing is critical. Levels and understanding the peak formations. Now, I've kind of tried to give you some groundwork for you to now go and look at your charts and study these. Timings, levels, high and low of the day, the peak formations, and the session timing window. Don't get caught chasing the move. I want it to go vertical or jam me in. If I'm looking for a long and I'm looking for a short squeeze, I want to get jammed into a peak formation. Remember what I said. They bring you back into the peak formation. They bring you back up into the peak formation. They break structure and bring you back up into the peak formation. Equity market opens, they bring you back up into the peak formation before dropping away. Hopefully that helps, traders. Go through your charts, study them hard. Massive moves today on many markets. It's Monday. We've had incredible opportunities. Master your craft. Keep it simple. Don't fill your head with gobbledygook. Look for setups. Know exactly what time it is. Trade your session trade and get off the screen. Learn how you could have scaled it up in size or traded it better. Get rid of the FOMO. Get rid of the analysis paralysis. Know exactly what you're looking for. If it's not there, find a pair that's set up better. If there's nothing there at all, walk away, get off the screen. Come back to the next session. Have a great week, traders. We're starting it off strong. It's going to be a big week. And may the markets go with you.